Now, so what I normally tend to do is I always look at what the markets are basically, and I want to double check whether if we're still having that report today. So 2 o'clock, so that's the next tentative time in approximately 25 minutes.
How come you don't change your Forex Factory to your current time so you can see what your clock actually is versus mentally trying to convert it to New York time?
Everything that I do is always based on Eastern Standard Time, and then I just convert everything. For me, I like everything to be in default in Eastern Standard Time. So, because New York is still pretty much the mecca of the financial markets, whether we like it or not. And yeah, so I just basically, it doesn't matter if I travel as well overseas, I just like to put everything in Eastern Standard Time. It's by personal preference. Some prefer to be on their own time zone or Central Time or Pacific Standard Time, but I just like leaving everything in Eastern Time. Alright, so that's pretty much just double checking. I'm just going to have a quick look in terms of the dollar index. Index is one of the most important aspects in trading, so let me double check. What I'm looking for is simply the direction. Where's the direction of the actual trade itself? Is it still pointing to the upside or to the downside? So despite like the market's actually is another 90 point, close to 1%. Last night you saw it. See, it's amazing how things can just change automatically. Where the uncertainty of events could occur. Now the question is, what happened early morning? So you can also check through here. Golden X only at 9.9. So what was the reports this morning? There's really no reports early in the morning. I believe all the news okay, the risk are like to be repeated. Okay. Okay. So everything's got to do with the Feds. All right. Let's have a quick look in terms of the dollar index. Looking at the bigger picture, so I'm actually sort of I'm still bearish with this. Probability can drop all the way down, so that's pretty good. Now it's also in level demand, checking out on that end daily. So bearish with that.
When you trade the FOMC, do you just trade the euro, or what determines what currency you trade?
Good question. Since the FOMC meeting is a dollar currency, so it doesn't really matter which one that you will trade against the US dollar. You can trade the pound, you can trade the Aussie, you can trade the euro, dollar yen, Kiwi dollar, dollar against the CAD. So anything major is against the US dollar, you can trade anything pretty much. You can trade the yens. It will still follow pretty much everything as much as you can. So let's say, for example, actually the exercise we did a couple of days ago, notice how basically stated that it is safer to sell rather than to actually buy because of these two. So we shorted basically. So part of the game, what the plan was, if you were short around that 103, then you're definitely up currently right at this point in time. So you can trade the dollar against the yen, but because the yen is also a neutral-based currency, I like trading the euro against the dollar, and the reason for it is because it's 57% weighting with the dollar index, so it has a inverse correlation between the two. So right at this point in time, I tend to do 4 things. Okay, we have an indecision right here. So since it's gonna come in a few minutes, 4 hours, 1 hour, a nice 30 minutes, 15. Okay. Alrighty. And then analyze pretty much where I want the stuff to be. When prior to news, normally you have to be, as much as possible, you need to be quick. So I can see how there's this range between the two, but because of the bulls on this side, we trace pretty much almost every level right there. Okay, then I go through a 4-hour chart from top to bottom. So we have a downtrend on this end, we have an uptrend basically on that end. All right. Okay, and then what I'm trying to ascertain here is simply the ranges of supply and demand. You can see here a really good supply level, and there's a big range of a big level of demand right at this point in time. Then we have a nice equilibrium pretty much within this level right there. Okay, so there's these two portions. Righty. So we have that. Okay, so we already discussed this as well last night, that they have to retest this price, meaning they did within that level. So there's a new lower low, then they have to retest another price to retest now this price, whether this is really the lowest. So 60 pips, quite a lot between two midpoints. Okay. Equilibrium, and this is now your new demand. Right. Then based on the 15 minutes, still pretty much in the downtrend, you have an uptrend from here. So you got two converging. Okay, so two converging price points between the two. So it either that's going to explode to the upside or going to explode basically to the downside, which makes sense because in terms of it's going to be some form of uncertainty at one point in time. And tick volume actually is nothing, so they're definitely waiting for something. So we're going to wait till there's some form of a push. Based on 4 hours. Interesting. Okay, interestingly enough, there was a increase in volume. all we're gonna do now is just simply wait till the news will come. So we got 15 minutes, and I will also click show time. Okay. Overall, we have an uptrend. Shorter term, we got on the downtrends reaching the level of supply. So in terms of a risk component, I believe that, the price can come back and then can come back up, or come back down and come back up, and just have to wait and see on what they're going to do. If there's a clear breakout in 36.83, we go in. We go along with it. If not, then we go short with it. Right. I think, let me double check.
What does it have to hit to make you want to go short? What does it have to break out of?
One second, please. Okay. I'm sorry, Ariel.
I can see we're 36.83. You say if it breaks out of that, go long. But what's your cue to go short?
Oh, once the price starts to tick, you'll see that amount of volume or the volatility hits. You just gotta be with it. But you gotta wait, because right at this point in time, it's converging between 2 points. On the very short term, it's pointing to the downside, but longer term, the probability is going to go to the roof. It's highly probable. So, and the dollar index is currently very weak right at this point in time. As far as I'm concerned, it can jump all the way down here. So it all depends on what the report's going to be or what they're going to say. It can go up and down like there's no tomorrow. However, because of this, for a swing trade, long, medium term perspective, it can drop over here to the downside. And this one, it can easily boost to the upside. If the price is approximately at 61 or probably even lower here, 50, then it would be good. So if we can get a better price around these levels, there's a range between 2 points, 40 and 50, is a much better deal. But at this point in time, it's too expensive, and plus you're at a supply level where there's still that probability that it could easily drop, right? So you don't want that. Okay, actually, let me look as well the pound against the dollar. Pound against the dollar is also doing the same. It's pretty strong. There are two ones that I would look at right at this point in time. So nothing through there either. But the dollar against the yen. Dollar is pretty weak. So if we go through 1L, yeah, that's gonna fail. 4 hours still pretty weak. Holy moly. Okay. Anything with the pound yen, same. I think that's gonna fail as well. That's gonna fail too. Okay.
Have you ever heard of IntelliCharts?
I'm sorry, what was that? Sorry, Earl.
Have you ever heard of IntelliCharts?
Nope.
It's this data provider. I think they want $50 a month, and when you set these charts up like this, whenever you move the cursor on one, it automatically moves the cursor on all the other charts at the same time.
Oh wow, that's pretty cool.
It's very cool. You could be in a 1 minute chart and a month chart. Wherever you move it, it moves the cursor correspondingly on all of them at the same time. Obviously in different speeds because one's moving faster. But you can drag your cursor, and it's really neat to see it at any one time.
Oh wow, that's pretty good. Okay. Maybe I should get that or this one. Wow. Sorry, I'm just thinking whether if we want to go through this guy right here or the euro against the dollar. This name is added that one. Okay, right, that's pretty good. Just coming back down just a little bit.
What do you set a stop at when you're trading news like this?
This here, the low basically of the day, because the low of the day has already been established. So that big boy right there, 3601.
Got it.
There you go. Let the price come back down a little bit. Yeah, I don't want to do that. Okay. Let me play this game. Let me play this here again. Because if I do that, it will automatically close the outer position. First thing first, that rule.
So why the yen, the euro yen right now?
Sorry, I'll just 1 second, mate. Okay. Why the euro yen? Because I have an existing trade with the euro against the dollar, and since it's going to be a momentum trade, and my current trade of the euro against the dollar is a medium to longer term trade, and if I will buy and sell very quickly, it will close the first position that I already entered. So no go. So I'm choosing the euro against the yen, and the reason is the yen will follow. So if the dollar basically will tank, the yen is also going to tank. Actually, sorry, it's going to go up the other way. Sorry. So 5 minutes, less than 5 minutes, we're going to have basically a thing through there. So it's just stabilizing itself right at this point in time.
Is this something where you enter in threes and you scale out, or you just don't even do that on news like this?
On the news like this, no, I don't. I just basically just one, because if you're scaling out in a 3, I mean, what I tend to do is it all depends as well. Like what I did on the last one, yeah, basically bought 3 and basically closed one position at a time depending on where it's going. Alright, so there's an activity there. Something is happening.
So you like your lowest chart for news is the 15-minute then?
5 minutes for me.
Well, 5 minutes.
Yeah. 1 minute's too, what do you call it? There's too much frequency, plus the spread is just way too tight. I mean, not too tight, sorry. I mean, it's not worth it in my opinion, like in terms of 1 minute. 2 minutes, okay, but 5 minutes more than good enough for me.
Now, when you put a trade on,
Mm-hmm.
do you have to, with FXCM, do you have to then, once it's in, go in and put in a stop since you don't really know? Or do you,
I already did put the stop. So I put the stop on the high of the day.
Oh, because you think it's going to go down.
Correct.
And your high of the day was, let me take a look. So you should be right around 141.24.
Correct. I put mine at 141.30. Okay, so since we're sold, we need to be in the ask now. 3 minutes.
Typically, how long do you wait to get in? Or what tells you? I mean, this market can just go crazy, up, down, up, down. You talk about head fakes.
Then so be it, right? This is where the emotion, you need to control the emotion.
So you're looking at 4 charts there.
Mm-hmm.
4 hour, you're not going to really look at that. A 30-minute, a 15-minute, a 5-minute.
Mm-hmm.
On those 4 charts, what is the breakout lines that's telling you when to go long and to go short? If it breaks the high,
4 hours, because it's basically we're momentum day trading here. So I know now that I know the direction of the trade. It's pointing to the downside, not to the upside. So if something is going down to the downside, if you're swimming down river, are you going to swim back up?
No.
Absolutely not, right? If you swim back up, you'll drown. You'll get tired. You can swim to a certain point, and you get tired at one point. You just have to come back down. So like same in the markets. Right at this point in time, the reason why I short is because of the direction. Better entry point obviously was around this level of 39.71. So here we go. Bam! So that's my entry right there. So the news is, see, that's even 1 minute prior to the news. So we're going to see some a little more volatility right there. Look at the spread. The spread was huge. 14, 9.8. Everything right now, if you look into the euro, dollar, the pound. So no one's bidding or asking right at this point in time. Look, just it's fast. Like 10 pips, 14 pips. This is pretty much part of the personality now, that if you cannot handle the speed, then you can't trade it. You'll get taken, right? So here we go. Whatever he's talking or he's saying right at this point in time, nobody's willing to buy or sell, so it doesn't matter what he's saying. I wonder what's talking right at this point in time. Let's see. So federal funds rate, no change, 0.2. Okay, let's see. Federal chops treasury buys to 35 billion a month. And look at the volatility. And we're just gonna let that ride. So
you're in short?
yes, it's a shorted ride.
I didn't understand what made you trigger to get in short. I know you wanted to get in short, but
Yeah, it's just experience, Earl, unfortunately. It's reading it, knowing the direction. We know that the direction is pointing to the downside, and your risk is actually really small and your probability of winning. Like I said, it just, just imagine you're swimming within the tide, right? If you're swimming against it, you will lose. So we're going to let this settle just a little bit because the spreads are still pretty big. So notice how the buyers and the sellers, they're actually fighting. They don't know where to go. And look at the volume itself, and back and forth. Retested a new low. Within that low is 39.25. This low is 39.18. And you're still pretty much. This is, you're asking, how do you really know? This big boy right there, it's too strong, too powerful. There's no way. You need a lot of buyers in order for this to be pushed back up, in order for the price to be pushed back up. So you're right, at this point in time, we're in the level of demand, but it's just correcting itself. From a medium point perspective, the market is just simply trying to correct itself before they might push the price even further to the downside. If you go through a daily chart, you can see here very clearly there's more room in order for that to head back even around this. I mean, actually here's currently in demand right at this point, but they have to retest certain price points, okay, around this level. If we're going to be really objective, right at this area here, 138.44. Okay, that's another 120, basically 120 pips to the downside. Then it's like pretty much like a 4. Okay. So those are the things. So it has to retest. It needs to create a high, a higher low before it can rebound to continue the direction from here. So from there, then bam. Alrighty. So let's see on what else the reports is saying. S&P 1780. So there's a big whipsaw when it came back up. Nothing. Text of the FOMC statement. Okay. Next, the growth in economic activity picked up in recent quarters. Labor market indicators were mixed, but an unbalance showed further improvement. The employment rate declined, but remains elevated. Well, we already know that. Household spending and business fixed. Investment advanced. more quickly in recent months, while the recovery in the housing sector slowed somewhat. Fiscal policy is retraining economic growth, although the extent of restraint is diminishing. Inflation has been running below the committee's longer-run objective, but longer-term inflation expectations have been remained stable. Okay, so Bernanke is still pretty much sweet.
What was that? 35 billion. They're gonna. Was that?
Taking into account extended federal fiscal retrenchment since the inception of its current asset purchase program, the committee continues to see the improvement in economic activity and labor market conditions. However, the period is consistent with growing underlying strength in the broader economy. In light of the cumulative progress toward maximum employment and the improvement in the outlook for labor market conditions, the committee decided to make a further measured reduction in the pace of its asset purchases. Beginning in February, the committee will add to its holdings of agency mortgage-backed securities at a pace of $30 billion per month, rather than $35 billion per month, and will add to its holdings of longer-term Treasury securities at a pace of $35 billion per month, rather than $40 billion per month. So they're cutting it down by at least $5 billion, right?
Yeah.
So is that good? Is it bad? I don't know. What do you think, Earl?
Well, the only, I guess it doesn't matter. The tape is what it is. But
Yeah.
I think the only thing holding up real estate is the fact that they're the only player in town buying mortgage-backed securities. So if no one buys the mortgages, there'll be no loans. So we'll see. I think they can do that though because there's not much demand for it right now anyway. Refi and everything's kind of dropped off.
Gotcha. So I think because of the decrease of the five billion, that's what caused the market to come back down. So I reckon people already knew ahead of time because you saw it a few hours ago when we were doing the live trading earlier. The futures were up, right? It was pretty strong. So someone already leaked or already knew what the news was prior to even it came up. Okay, the committee will closely monitor incoming information on economic and financial developments in coming months and will continue its purchase of treasury and agency mortgage-backed securities and employ its other policy tools as appropriate. Okay, so the committee is also affirmed the current exceptionally low target range for the federal funds rate of 0 to 0.25% will be appropriate at least as long as the unemployment rate remains above 6.5%. Does that mean then that if it goes below 6.5% that they're going to start increasing the percentage? I think that would be, sorry Earl, while we're talking into that, check it out. So it is definitely tanking. So now that everything's settled, and notice how before it was like 16, 18. This is now a much more better, proper spread for it. So they settle down. The reaction has come down a little bit, and hence this is what's currently happening right at this point in time. Okay, so created another new low based on that. 139.14, 139.14.6, 14.5. Ooh, doesn't make sense. How come that is? Am I seeing? I mean 14.5, 14.6. Are you serious? Really? That is lower. See? Now, this is where I don't like about automated trading. When something like this happens, when volatility hits, look at it here. The data says 139.146 in terms of the low. 139.46. Let's go show cursor data. 139, 146, 139, 145. So it doesn't make sense.
Right.
5, 6. This one should be higher if it's 146, not 145. So definitely there's something going on there, right? In terms of that, and this is why I don't like automation, because of things like that, and then they can easily some your eyes already see it, but in terms of calculation itself, it doesn't really make any sense. All right, there are a couple of things as well, when doing an FOMC. It's just simply because one is also not just what we're looking for, the intuition part. I was just confident that the price is going to drop. Here's also another much better pricing here, 139.70. Went back to the level of supply right there, and now heading back to the level of demand. All right, here's something now I'm really currently looking at. So 139.15.7. They retested the same price point.
Right.
But because we have another 3 minutes in order for this to finish, can the price?
Oh, yeah.
Can the price hold its price around pretty much here? If they're gonna hold that price, then it's a matter of actually selling it back. Yeah, I can wait for another 2.5 minutes. So yeah, they're holding it back right at this point in time. What if I change that to a 1-minute chart?
What price did you get in at?
139.48. Yeah, look into the 1-minute chart. So they're holding the price right at this point in time, and overall it's still pretty much on the downtrend. Okay, let's see. So there's another 2 for a couple more minutes. Sellers are still currently in control, but we're on a level demand. There's less than 2 minutes before that 5-minute will finish. Minutes, 1 minute, 15. Notice on the 15, yeah, 15 minutes is still too strong. I think there's definitely more room in order for that to head back to the downside, in my own opinion. 30 minutes, definitely more room. Okay, but on the 1 minute, definitely they're now holding the price. That 139.14 is what they're holding it for. Okay.
So now that the news kind of shook out, it's not really gonna. I mean, it made its big push, and now it's just gonna stall around and probably.
Well, if we're looking at.
Or can it creep all day down now? Just slowly creep down, 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 down.
Absolutely. Because of those lows, see, it is going to keep on continuing further. If I go a 4-hour chart, that's going to go even further lower, and then it will test. Yeah, it's currently be testing here. Okay. Right. So we'll wait for another few more minutes.
When you got in, wasn't the spread really high?
No, I got in before the spread was low.
Why was it low? If FOMC hits, isn't the spread high right off the get-go? I mean, the minute news hits, isn't the spread just high?
I went in 5 minutes prior to the news.
Oh, you entered before the news.
Yes.
Oh.
Yeah, see
well, that's
here?
interesting.
There's a timestamp. based on that 1
I'm
minute
wondering how
chart.
you had. I didn't know how you had that stop set in advance. I was like, how do you put a stop in before he had a
I
trade?
Yeah, you can put I entered it and then I put the stop pretty much straight away.
Okay, I didn't know you entered before the news.
Probably unless you stepped out of your seat.
That's kind of. It's interesting. I didn't know. I didn't know.
All right,
So
so basically, you just
what I was
close the
saying last
position.
night was when you trade news, you said, well, you can get head fakes. So I thought you waited for the news to hit and look for some indicator and then made your decision which way you'd go, like possibly long even.
The reason is because I already knew what we're looking for. So what happens is the markets, they leave clues, and notice how here there was an increase. Once there's some form of increase in volume, the markets are already, they're trying to buy or sell a little bit. So I'm looking for those set of clues prior to the reports. And if I had a little bit more in terms of, because I already have a few trades basically in, the definitely more ideal. The ideal way of really of day trading simply is if there's a little there's some room. If the price comes back up, then it's a much easier, better deal. But the problem with that is simply it is a little bit more dangerous. You can get a better price, but the spread was just way too big, and you saw it. Like it was
Yeah.
18, 19 within the spread. So it didn't really matter whether you'd be buying or you'd be selling it within that price point. Because if you're
Can I ask you,
selling, the price of the buy was over here, but the price of the sell was on this end. So it didn't really.
can I ask a really dumb question, and I
Mhm.
just can't get an answer to it? If you entered 5 minutes before,
Yes.
and let's say and to go short, and in the first couple seconds when the news hits, let's say the spread, just for argument's sake, let's say the spread was a 50-point spread, just for argument's sake. Does that mean you instantly have 50 points in your pocket? Or can the
Absolutely.
spread go the other way? If you were going long and there was a spread of 50, would that take you out? I mean, let's say you had a stop loss of only 20 for argument's sake.
They will
Can
take
that
you
spread
out.
just, yeah, it'll take
Absolutely.
you out.
Yes.
So, but can it make you money too? Does it depend which direction you bet on? If you
Oh
bet
yeah.
short and there was okay, I'm going to try and make it simple in my mind. You have a 20 pip stop only,
Mm-hmm.
and there's a 50 pip spread. You
Mm-hmm.
went short.
Mm-hmm.
Does that mean it took you out? Or if you bet long and there was a 50-point spread, would that give you a bunch of points automatically? Or
If
does it take
you
you out either way?
if you went short, say you went short over here, right? If you went short over here, and then your stop was only a 20 pip stop, but there was a 50 pip spread, they will take you out because that's what they do. Because now of the spread of the if your close position being a buy will be the
Right.
buying or the asking price, right? Then you're done. They will take you. And this is pretty much what I was telling students or people who ask. I said, depending on the strategy that you use, the system that you use, and also depends on the person's emotionality. If they cannot handle it and they're not willing to risk and they're day trading, this is how they will keep on losing because of the volatility. The price can just, when there's especially something like this with the FOMC meeting, they will take you out really, really fast, really quick. That's why my stop was the high of the day. The probability that they won't take me is really, really high, almost guaranteed that they won't take me. And the reason for it is because I am with the trend. I am with the direction. It will take a lot of buying power in order to overrule the energy or the current of all the sellers. There's more sellers than actually buyers, right? So you really need a lot of buyers in order to do that. So that being said, however, if you went, say, long, and then it also went, it went up 50 pips to the upside, then you've easily made 50 pips just like that, in pretty much in a millisecond. hence is why this type of when it comes to type of news, FOMC is one of actually the best ones of actually trading. There was a couple of times where we saw actually it dropped like 100 to 200 pips, basically within a span of 10 minutes. Here's where you can make 10 between 10, 20, 100, you know. So like for this one to make 25 pips, and to make close to about $1,000, it's not bad for just us waiting, right? So it's just being, with this game, one, you need the patience. Two, you need to control your emotion. Just let the market do its thing. I know it's going to be a lot of speed. So just being patient, then knowing the direction, of course. The planning preparation, you saw me how I basically plan, already saw it pretty much on which one that I basically wanted based on that. In terms of, and this is pretty much, I'm not using any indicator. The only indicator basically I wanted to look at was the tick volume. That's pretty much it. I just wanted to see in terms of the amount of buyers and sellers are being created. But once if like, I don't know if I don't have it here. No, don't. So say for example, I'll add one more. Even with a moving average of the 8 and the 10, actually no, here was the entry point. There's nothing, so it kept actually even tanking even further. Dang, okay, pretty cool. Let's say 5, 15 minutes, 30 minutes. Wow. Even looking at the 30-minute chart, the entry actually to go already short based on an M3 methodology is right there. So actually we already missed it because it's 4:30 Eastern Standard Time. Notice how it's just started trying to stabilize continuation. Okay. 30 minutes, 1 hour. How about on a 1 hour? Yeah, the entry point was 140.58. Then getting to a bigger time frame, there's no entry. Actually, the entry just was was over here actually. Second point of entry is over there too. Oh man, look at that. But yeah, within the direction, you can just already automatically see actually the direction of the actual trade itself. 1 minute chart, even on a 1 minute chart, the entry was actually right there. Another entry to go short. So, the methodologies work in any time frame, and of course they go in hierarchy, M1, M2, M3. What I just basically used was M1, because M1, that methodology would work in any time frame with the cheapest price, with the lowest risk, with the highest probability of actually winning. So, and then, for an M2 component, there is actually, I don't know if there is one, but unless we go through one by one using a 1 hour, 30 minutes, yeah, 15, even on the 5. On a 5-minute fly right there, nothing. Oh yeah, there was one here. But it already said here at 12:05. So there was 12, 11, 9 o'clock. Okay, if I delete that.
But that wouldn't have worked though, because what would your stop been on that? That one right there. What's your stop? That would have worked.
Okay, 10.3. I know. It is not within the criteria. Because I wanted, if it was here, then great. So nothing. But let me put this back right there.
When are you going to teach the M2 and M3 again? Because I don't have my notes for that, and I have to brush up on that again.
Tomorrow, Thursday.
Okay.
Basically in class, because there's tomorrow, Thursday and Friday. You guys have 11 to 1. 11 till 1. 11 till 1 on Thursday. but for you and Samantha is 11 till 4.
Now, would you, Ken, I know you're going to say this is the dumbest thing you ever heard, but if I just traded M2 and M3, because money, I mean, if you just traded those religiously and you didn't do the hunches and you just played the rules, no hunches like we were reading in that book yesterday. I ordered those 2 books, by the way. I couldn't find them. Barnes Noble, nobody had them, and so I just went online to Amazon and I went and bought them. The only problem is they said they won't get here till like maybe the 4th, and I was just sick. I just wanted to read those things. I was like, damn it, you know. I want them for my library, but I want to read them now. I'm just kind of distraught over that. Are you on this trade you're in right now? What determines when you get out? Are you going to scale out a little bit? Are you just going to let this thing go because you got the trend and just let her go all day? I mean, where's the greed factor? What determines when you kick this? Because if I was on this 5-minute light, you'd have been out already based on those things we did last night. You know, those little tests we were doing, reading these candles. Now I have a nice big reverse candle, so you'd say, well, I'd have been out by now.
With trading, you definitely need patience. So regardless of whatever trading system that you would use, patience and also just following it and without micromanaging the actual account itself. So from the exercise of what we did yesterday, in terms of the probabilities, right, knowing also the probability is also really important. Like that exercise we did yesterday, is it a euro against the dollar? Yeah, Jennifer's trade has already been taken. No problem. He got taken at 36.83. So within that 1/3, because that with the highest probability of winning, that was the highest probability of winning. So she still has 1 order left. So her order was at 137 odd something. So it's just mainly a matter of waiting, and her stop was over here if that was the strategy that she was doing. But if I'm using strategy, like I said, I don't use any stops because I just follow what the price is basically dictating based on the moving average. Then when the price goes more on a more profitable trade, then that's when I start putting a trailing stop. That's the only time I put a trailing stop is when the price is at least 50 to 100 pips my way, because that's pretty much just a cherry of the cake. When that occurs and you trail it to break even, but my personal rule is I add 10 pips on top of the break even. So if I'm already 100 or 50 pips up or 100 pips up, I already trail my profit. So it's no longer it's a free risk trade, technically speaking. So you're asking me if you follow this religiously. I believe the best is I will email you contacts and email them and see what their response is going to be. Like, how did they make 200%? How did they make 300%? How did they make 100%? Just using these 2 methodologies.
Yeah, that'd be great.
So
yeah, I'd love to talk to them.
Definitely, because there's a.
It just gives you confidence and say, what the hell are you doing? I mean, I don't know. You can kind of back test too a little bit, I suppose. But
you have to develop. Like I said, you just have to have the ability to be patient. If you want instant cash, instant money, the best is a 4-hourly chart. That is your best bet. But you need to keep on looking at the chart every 4 hours. So in other words, you need to have an alert on your phone, or basically an alarm on your phone, that every close to 4 hours you just have to double check what if the price is still within your criteria. If it's still within your criteria, then stick to the game. If it's no longer within your criteria, get out. Or if you're not comfortable, then always put the stop on the last low of the actual trend itself.
You know that exercise we did last night, that was just an exercise. Can you actually trade doing that?
Yeah, we're going to do more of that on a live trading environment using your demo.
But I mean, isn't that is that a viable way just to trade? I mean, just what we were doing. I mean, obviously, you were doing was pretty simple. Do you take that very same strategy and just add some knowledge of candlesticks and then and maybe an indicator, or do you just strictly price action the way we did last night?
Just purely price, yes. And then that's where the different components come into play. That's just one piece of the pie. But if you can just follow that and then you can look at other certain things, oh yeah, that's, that is the key to everything. Yes.
What light? If you were just doing that strategy,
Mm-hmm.
this is a dumb question, but what light would you follow?
Price action.
Anyone would work.
Yeah.
I know, but
Yeah.
would it be a 5-minute, a 20-minute, 15-minute? I mean,
Multiple time frame analysis. So these questions, Earl, they are really advanced stuff. So you will get all those one piece at a time. Unfortunately, you wanted everything. It's like you want to play golf and you want everything in terms of technique to be better, and then you want to play against Tiger Woods straight away. You have to take one step at a time, and you need to master those steps one at a time before you're going to get there.
I really liked that exercise last night. That was actually kind of, well, it was fun. I mean, I said,
Yeah.
wow, for the first time, it was, you just felt kind of free. It felt like you
We're definitely going to do a lot of those exercises, and I highly recommend do those exercises on your own time, because if you can just follow those, you will actually see it, and your brain will be, you're going to what do you call it? The brain will just automatically know it. It's like, oh, sweet, and that's where you're looking at, like, why did you enter way before the news? Because I already can see certain things, like I already know what's going on. The price is just one component. If I look at it here, look, with the same exercise on what we did, right? Yes,
Right.
last night. Sell. Here, hold, nothing, sell. Then I look the direction. It's still pointing to the downside. My risk is so small. My probability of winning to go to the upside is highly, highly probable. Here's the next portion of where they're going to tank it. Bam. See? So it's just a free fall. It's just a free ride. My risk was so small that even if my risk was on the top end, the probability of not me getting taken, highly, highly probable. When I say highly probable, it's like 100%. I'm not going to get taken because they need a lot of buying power in order for the price to get up there. So I already knew which, like, on the price points, and I had to say, like, this is my danger zone, this is my profit area. So I already knew that I can only make this X amount. That if it goes through within here, do I need to be greedy? No, because I'm double checking certain price as well. The price didn't want to go any longer, but they pushed the price even further. Look, and it's now see what Larry Livingston was saying. You just see the ticker, right? 1, 2, 3, 1, 2, 3. So you will see that, and then here, hold, and you're gonna say, will you buy that? Absolutely not. Hold, because of the long tail. Then you can say, where sellers are more in control, but also a long tail. This is just basically on volatility. They have to retest this price. So technical analysis has a lot of tips, like candlestick. There's just one equation of I'm just basically teaching you, and the very simple stuff that nobody teaches, not unless you learn it from a pro. I learned this from a pro. But of course, also now going to the floor and just getting a bit more visual makes totally sense. All right, Errol, I have to wrap it up. I'm going to go to a meeting. I hope you enjoy that. We'll definitely see you tomorrow, 11 o'clock. And, yeah, we'll see you tomorrow, Errol.
Look forward to it. Okay, thanks, Ray.
All right, Errol. Take care. Bye.